Hey, fellow Stock Guardians. It's Thursday, May 20th, 2021. I'm Hoda, co-founder and CEO of StockCard, reporting to you from a green stock market for a change. I researched why the stock market indices reversed today and dug into everyone's favorite oat milk producer, Oatly's IPO. The stock market indices ended Thursday in the green. The new weekly jobless claims report came lower than expected, boosting investors' confidence in the economic recovery. One interesting development that is worth discussing today is Chairman Powell's remark about cryptocurrencies. The chairman released a video discussing the Fed is going to conduct another comprehensive review of digital currencies in the summer. This is one of the most critical indicators to argue that digital currencies adoption has reached a meaningful level enough that they are worth the Fed's time and effort. The chairman specifically discussed stablecoins, that their value is tied to the value of a dollar. He also addressed the risk of allowing private companies to run payment systems not regulated by the Fed. Here's a snippet of the most important section of the Fed's chairman talking about digital currencies issued by central banks, also known as CBDCs.
Technological advances also offer new possibilities to central banks, including the Fed. In particular, technology now enables the development and issuance of central bank digital currencies, or CBDCs. A CBDC is a new type of central bank liability issued in digital form. While various structures and technologies might be used, a CBDC could be designed for use by the general public. For the past several years, the Federal Reserve has been exploring the potential benefits and risks of CBDCs from a variety of angles, including through technological research and experimentation. Our key focus is on whether and how a CBDC could improve on an already safe, effective, dynamic, and efficient U.S. domestic payment system. We think it is important that any potential CBDC would serve as a complement to, and not a replacement of, cash and current private sector digital forms of the dollar, such as deposits at commercial banks. The design of a CBDC would raise important monetary policy, financial stability, consumer protection, legal and privacy considerations, and will require careful thought and analysis, including input from the public and elected officials. To help stimulate broad conversation, the Federal Reserve Board will issue a discussion paper this summer outlining our current thinking on digital payments, with a particular focus on the benefits and risks associated with CBDC in the U.S. context.
I would interpret this as a sign that digital currencies are well on their way to transform the future of money and should be a part of future-focused portfolios. Today, I looked at the list of 2021 IPOs by clicking on the 2021 IPO bubble on my main StockCard dashboard. You have the same bubble list as I do if you log into your StockCard account. It seems more than 800 companies have IPO'd since the start of the year. That's partially thanks to the rise of SPAC IPOs that allow companies to go public with less hassle. The one company that is noteworthy to talk about is Oatly, O-T-L-Y. Everyone's favorite oat milk company went public today. And when I say everyone's favorite oat milk, I mean it. Oprah Winfrey, Jay-Z, even former Starbucks CEO Howard Schultz are big fans and investors in the IPO. Who can blame them? Frost that oat milk to perfect temperature and pour it over your espresso, and it is divine if you ask me. But I digress. Looking around the company's stock card, Oatly is unprofitable. However, revenue jumped more than 106% in the last fiscal year. The alternative milk industry is expected to be a $40 billion industry by 2026 with more than a 10% growth rate per year. The stock has the market's momentum going for it. But also several other companies, mostly private, are racing to grab a market share. It's going to be a competitive market. Oatly's brand could help it lead the market, but it's not a slam dunk. as some investors believe. The company made $421 million in 2020 and has got $13 billion in market capitalization. That's a price to sales ratio of about 30. Compare that to Beyond Meat just as a benchmark, and that company has a price to sales ratio of 15. Yeah, Oatly is expensive, alright. I'm not ready to jump in before learning more about the company, but it is undoubtedly a good stock to add to your watch list. That's it for today. If you haven't already done so, please give StockCard a try and research as many stocks and ETFs that you want. Consider following a few successful investors by visiting the stock pick page on the StockCard platform, and don't forget to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. And as always, if you like these daily market recap reports, help us grow the StockCardian community by liking, subscribing, and sharing with your fellow investors. I'll see you tomorrow.